the business trends. I have Emmanuel from ARM. Morning.
Hi, Lagos. Good morning.
Oh, you're a natural. Hi, Lagos. I mean, we're co-anchoring the show this morning. Great to have you on the show. Now, if you'd like to be a part of the conversation, would love for you to send in your comments. So please kindly do so. Send to WhatsApp on 0809 444 0981. That's 0809 444 0981. If you'd like to send us a message on Twitter, feel free to do so. On Twitter, we're at Smooth981FM. Kindly use the hashtag Business Express 981. On YouTube, we're streaming live, so please go on there and search for Smooth 98.1 on YouTube and use the live chat option if you'd like to send us a message via that particular platform. Okay, so Emmanuel, let's dive straight into our stories for this morning, and
Right.
we're starting off with our story in the Middle
In the
East.
Middle
What's
East.
going on in the Middle East? So, Saudi Arabia signals it's had enough of OPEC and quota cheats, according to Bloomberg report. They said that Riyadh cut deeper to offset higher output from other members. Iraq, Nigeria, Kazakhstan, and Russia among OPEC plus key cheaters. They've been called cheats. And I mean, from this report, it says that for the last year, Saudi Arabia has largely turned a blind eye to cheats within the OPEC Plus alliance,
Yeah.
cutting its own outputs more than agreed to offset overproduction from the likes of Iraq and even Russia. Now, Riyadh's had enough. What do you think? Do you think the concerns of
It's
them
very
being
valid.
upset is very valid?
First of all, let's just give a quick background. Initially in 2016,
Yeah.
we had a kind of an OPEC plus alliance, which involved the OPEC oil producing countries,
Hmm.
which are with OPEC together with the likes of Russia. So they agreed together to cut productions to a certain amount. So they gave each of them a specific quota,
Hmm.
and this was just to make the oil price to increase. So if you could recall, in 2015 and 2016, where we had the oil crash, and that was due to the oversupply in the system. So the idea behind this alliance was just to limit that production
Yeah.
and just to support our oil price. So, however, what we've been seeing recently in the past few months is that most of these other OPEC plus countries have not been complying with the quotas they were assigned to.
Yeah.
Um, in fact, if you check for the likes of for some countries, the likes of likes of Iraq. Let's start with Iraq.
Iraq. Yeah.
Iraq, for example, they gave them a quota of not producing more than 4.51 million barrels per day.
Yeah.
But if you look at the average over the past 12 months, we're within an average of about 4.8 million barrels per day. Same thing with Kazakhstan. Kazakhstan accepted the limit of 1.86 million barrels per day. However, they produce far more than that. They've been doing about 1.95 million per day. Even with Nigeria, we actually have a production quota of about 1.68 million barrels per day.
Mm.
I've been doing 1.8 million barrels per day. More worrisome is the likes of Russia, who even produce who produce Russia will produce more. However, what you will see now is that Saudi Arabia has been the one out taking and the brunt. They've been trying to they've been trying to bear the brunt in terms of the shortfall,
Yeah.
in terms of the overproduction of most of these countries. Initially, Saudi Arabia, Saudi Arabia was actually assigned a quota of about production limit of about 10.31 million barrels per day
Hmm.
through the year. But when you look at the average, they've been doing far below. They've even been doing below that. They've been doing about 9.58 million barrels per day,
Mm.
and that they've been the one why they've actually even been supporting and these production cuts was they actually need oil price to be high for the high PO of their Saudi Aramco. I think by December 5th or so, they're gonna be listing the Saudi Aramco. So I
Okay.
believe, I think subsequently after that, Saudi Arabia might want to take a different angle in terms of this production quota. Based on them, they believe that no matter how small a country is or
Yeah.
how small a production country is, it still counts. So they want every all countries to also comply together with this production quota.
Yeah.
And the implication of this is definitely going to be a bearish oil price. We're going to see we're going to see oil price go low because by the time you see oversupply, more supply of oil in the
Yeah.
market, that definitely will bring oil price down.
Yeah.
Yeah, yeah.
So Nigeria take note, particularly for us who's for our country where our budget is. I mean, most of it is pegged
Most of it is pegged there
on
to
the
the
oil
crude oil
price.
price.
All
Yeah.
right, thank you so much. We have a question from Trevor Noah's Lapel Pin. He says, so if Saudi Arabia should vex and no longer care about production quotas to cap oil prices, that means crude oil drop below. Yeah, so just saying what what you've mentioned with regards to the impact it has on Nigeria and the price of crude oil.
Yeah.
Dr. Banjo is saying Saudi Arabia feels OPEC is stifling their growth and member countries not abiding by their quota. Let them leave if they want. Do you think that this is going to be in the offing? Are they going to leave?
It's definitely going to be so negative for them, for Saudi Arabia also, because it's two-way for Saudi Arabia. At one end, if oil prices go far lower, it's going to affect their budget. They won't be able to implement
so
their
we're
budget.
not the only ones.
We're not the only ones. It's going to affect their budget. It's also going to affect their economic growth. However, I think what Saudi Arabia has now been doing recently is they've been trying to diversify their economy. They've been trying to bolster their non-oil sector. Nonetheless, but I still believe if oil prices still even go far lower than what we have now, it's definitely going to be negative for Saudi Arabia. So I still believe they still want to even maintain the oil price as it is now.
So very quickly, let me take this comment from MI, then I'll ask you a final question and move on to our next story. MI from Akoka says, in summary, being the good guy isn't paying them as much because other OPEC countries are not getting along with the program.
In fact, I have a particular data from that's from excuse me. I have a particular data from that's the I have a particular data from IE from IE. So from IE, that's the International Energy Agency. So they mentioned that since 2016 when they first started at the production quota, you'll be seeing Russia has been earning about $170 million a day more than it did in the final quarter of 2016. When the OPEC cut was first agreed, and this compared to what Saudi Arabia is earning of just about $1.5 million per day. So it shows
some people are cashing out.
Exactly.
And they're being the good guys. Yeah. Well, Ibrahim notes that Russia isn't a member of OPEC. They're observers that need to be carried along due to their capacity.
Yeah, but they are part of the OPEC Plus. So we have the OPEC Plus alliance, which now includes the likes of Russia also. So they have an agreement.
Thank you very much for pointing that out. Well, we'll keep our eyes on this and see what Saudi Arabia's next move will be.
Definitely.
Hopefully, it wouldn't be something too drastic that affects us. That's what we're thinking about. We're thinking at our country. All right, let's move on to FCMB 9-month financials, which has been released. Okay. We have a report on that. Can you take us through it, please?
Yeah, so last week Friday, FCMB released a long-awaited 9 months of financials. So they audited the financials for the bank, so that's why it was released later compared to the other banks. So for the results, we actually saw profit after tax declined by about 5% year on year. That was largely due to a lower non-interest revenue. So personally, to me, I believe the result of performance was actually not okay. First of all, we had actually expected the non-interest revenue to go lower over 2019, and that was largely due to lower FS revaluation gains. So in 2018, FCMB booked a lot of revaluation gains due to they booked a lot of FX revaluation gains compared to 2019, where we've seen our FX has relatively been stable over the period. So all that thing I noticed was the weakness in the net interest margins, particularly when
you had to take the interest in
particularly net interest margins.
Net interest margins.
Yes.
Okay.
Yeah. So that or net interest income. So that's the difference between interest income and interest expense. So when you drift further into the Q3 financials, we actually saw that that's pressure pinpoint. Actually saw that pressure come out from there. In Q3 alone, we actually saw interest income decline significantly.
Okay.
That actually affected their net interest margin. We saw interest income decline by almost about 20% quarter and quarter, and that was largely due to the lower interest income from loans. So when you look at their loan book, funny enough, FMB has been like one of the only bank or so that hasn't grown loans despite this whole loan to deposit ratio requirement by the CBN.
We're going to be talking about that during
year to date, they've grown loans by just about 0.8%. Year to date, while quarter and quarter is just about 3.3%. And when you look at their loan to funding ratio as calculated by the CBN, it's just about 57%, which is still quite far away from the 65% requirements that the CBN gave them. So they'll be having a conference call on Thursday. So we'll definitely be asking for that question on how they plan to do on just increasing their loan rates. Then aside that, one positive thing that we saw for FCMB over the 9 months financials was the improvement in the asset quality. Okay. So we actually saw their NPL ratio decline to about 3.5% from about 4.7% in the previous quarter, and that's actually filtered into the loan provision that we saw. Our free loan provisioning was down by about 50%. 50% year on year. 50% year on year. So aside that, I think one thing we'll be very interested in looking for SMB over 2019 is how the impact of this loan to deposit ratio will affect them. Beginning to see that already right now, even in 20, even as at Q3 already. But over 2020, we want to look at how more they impacted, and how much more they're going to benefit from a lower funding cost. But as it stands now, they don't seem to be gaining more traction from this lower funding cost. We actually saw funding costs actually decline over Q3 19, but when your interest income, your asset yield is declining faster. So it just makes just makes you worse off. Yeah.
All right. Thank you very much.
So
Just one quick question from, I'll call him TNLP now, Trevor Noah's lapel pin, because it's quite a mouthful. TNLP says, what is your take on the stock based on the 9-month performance? So on their stock, how are their stocks performing?
Now the stock price is about 2 naira, and I feel it's even very fairly valued compared to we have a fair value estimate of about 2.07 naira for our XMB, and as it is now, we actually saw a rally in the past two weeks or so, which has made the stock fairly valid relative to our target price.
All right. Thank you very much indeed. Now let's go on to the Central Bank of Nigeria, who on Friday projected inflation to slightly by 1.7% by the end of 2019 from 11.7%, from 11.6 currently, and then moderate thereafter, supported by its efforts at improving domestic production of staple food items. What's your take on this?
Yeah, so we actually saw inflation increase from about 11.2% or so to 11.6%.
Yes.
And that was largely due to increase in our food prices. So already we've been seeing the effect of this border closure filtering through inflation. The CBN also expects this trend to continue till December. However, they feel that this border closure and the effect on inflation will be temporary. So they believe by going to it next year, they feel the inflation is going to subside as this impacts of the border closure continue to way down. Then aside that, I think they also had a monetary policy meeting on last week, Monday, Tuesday, and they even highlighted this, and in the meeting they left the MPR unchanged. From the meeting they mentioned that they still want to continue to see the impact of recent policies in terms of the unorthodox policies the CBN has been pushing out to the sectors, the likes of giving DMBs a requirement of meeting loan to deposit ratio of 5%. So they want to see how this is going to pan out before they even do anything.
Well, I want to go back to your comments with regards to the optimism shared by the governor of the Central Bank of Nigeria that this will improve next year. That's the inflation rate will stabilize. How will that happen?
Personally, I don't see how that would happen. I don't really see it. I don't see how that will happen realistically. In a sense that next year we actually expect a lot of certain policies that might kick off. We should definitely see inflation definitely go higher. One of this is so
you're not confident as you're not confident as the governor of the central bank.
I'm not. So one of it is tariff increase. If we see electricity tariff increase, that would definitely take our prices inflation up. Another possibility is even increasing PMS price. So we have
had hints of that for a while. Do you think they'll carry on? Do you?
There's quite a lot of uncertainty around, because in the sense that
you don't want to say something now, then you'll guard the top.
No, not really.
All right. So, but I mean, isn't it embarrassing for the central bank to be projecting inflation for 2019 in December?
Of course, all monetary policies, they give their forecast. Not just even the CBN, even the FOMC. They give 3-year, 4-year, 5-year forecasts.
But we are giving our 2019 forecast.
We also have 2020 forecast actually. So they're just trying to retrace their forecast for the short-term period.
So this is short-term. But long-term, when they first released the forecast for 2019, were they accurate or were they spotting?
They definitely revised it. They do revise it every time. Like this recent one is revised.
So we keep revising.
Yeah.
All right. MI from Makoka says, simple economics. Reduction of supply from border closure doesn't necessarily improve local production. Inflation is only but a natural consequence, and that's why I'm a bit not confident as the Central Bank of Nigeria governor is about with regards to the rate of inflation stabilizing by 2020, because
to them they feel that several interventions will be doing spoil our supply of food,
Okay.
but I still feel we still far below our demand. So our production capacity is still far below our demand.
Demand,
So
yeah.
price might still remain high.
Mm. Well, we shared earlier during the news headline time that we're going to be looking at rice farmers coming together to discuss how they can help to reduce the price. We know that prices have gone up as far as 100% in cost. So we'll be looking at that in detail as well during Freshly Pressed.
Okay, all right.
Okay, so we move on to the next one now. This story is from Business Day. It says Treasury bill rates crashed to 4-year low as investors placed 383 billion naira in failed bids. You're laughing. Please don't laugh. There are people that are not laughing who are listening. Well, please, I mean, the fixed income investors are seeking high yielding securities in the light of the prevailing developments in the banks,
Yeah.
in the markets, and have once again been disappointed as attempts to buy the federal government's short term debt instruments at attractive rates were denied.
So the CBN banned PFEs as well as individuals from accessing OMO.
Mm-hmm.
That's the open market
Open
operation.
market, yeah.
We're beginning to see a lot of strong demand in terms of the treasury bills.
Yeah.
And when you look at the past two auctions now, we've seen the treasury bills rate has crashed significantly. The last auction, we actually saw the CBN offered about I think about 150 billion naira, about 150 billion naira, about 150 billion naira, and we actually saw the stop rates decline significantly. For the 1 year, it actually declined to about 8.37%,
Wow.
and that's the lowest rate we've seen since 2016.
Mm.
So basically, what I feel the CBN has been doing is that they've kind of one way or the other, they've been able to try and segment between the homo rates as well as when you look at the homo rate, the last homo auction that was done was at 50.3%, and we know that the homo has only been accessible to DMBs, as the commercial banks,
But yeah.
as well as the foreign portfolio investors rather.
Mm-hmm.
So what the CBN has been doing is that they've tried to still keep the FBI happy on the homo leg by still making rates attractive to them. While on the other leg, in terms of treasury bill rates, they've tried to cut rates down just to support our credit to the private sector and reduce our lending rates.
Yeah.
Reduce lending rates. So that's basically what I've seen. What I believe the CBN has been able to do.
All right, thank you very much. Just one comment here says a tale of two fixed income markets, over at 13% for foreigners and commercial banks, while we Nigerians are stuck with 8% for NTDs. All right, Lagos, that's all we can take this morning on Business Express 981. Thank you so much, Emmanuel. Emmanuel is from ARM and he's been, engaging in conversation this morning with me. Thank you so much.
Thank you.
And Rotus will be back tomorrow morning. So we look forward to having him here. We look forward to his unique style of presenting and we cannot wait to have him seated here. But if you'd like to join the conversation, don't forget to please keep it going on Twitter at Smooth981FM. Use the hashtag Business Express 981. At 7:30, we bring you Freshly Pressed 981.
Brought to you by
Thank you, Manu.
Yeah, I do have a nice day.
Thank you so much.
Yeah,